Hello and welcome to Value Research Podcast. You're listening to First Page, a column written by Dhirendra Kumar. Derivatives trading is a crime scene. SEBI's updated report on F&O trading shows the industry and big operators profiting out of retail investors' losses. Some 2 years ago, markets regulator SEBI published a research report on derivatives trading that began with the sentence, 89% of the individual traders, that is 9 out of 10 individual traders, in the equity F&O segment incurred losses, with an average loss of 1.1 lakh rupees during financial year 2022. While some people were surprised by this, no one who closely observed the equity markets found this to be unexpected. It is a known fact that almost all individual traders make heavy losses in F&O, but it's important that the SEBI study has put a number to it. In fact, at that time, I observed that if the traders had been tracked for a longer period, the aggregate number would have been higher. Now, SEBI has released a follow-up report based on data from 3 financial years, financial year 2022, 2023 and 2024. The headline conclusion continues to be unsurprising. Some 91% of traders lost money in financial year 2024 too. However, this updated report is quite interesting in many other ways. Its analysis has a level of detail that does throw up patterns that, if not surprising, are quite interesting. Some of these also point to the direction that regulatory changes should take. I've collected some of these here, which I would like my readers to pay special attention to, simply because they will help them build a mental picture of what is going on. Individuals made losses in F&O, and the FPIs and proprietary traders earned profits. Proprietary traders earned about 33,000 crore rupees of gross profits in F&O segment in financial year 2024. Followed by FPIs, who earned about 28,000 crore rupees in gross profits. Individuals and others incurred a loss of over 61,000 crore rupees in financial year 24. Algorithmic trading outfits made the most profits for FPIs and proprietary traders. 97% of profits of FPIs and 96% of profits of proprietary traders came from such entities in financial year 24. The percentage of individuals making losses in futures is consistently lower than that in options. In financial year 24, about 60% of traders made net losses in futures compared to 91.5% in options. In futures, individuals made an average net profit of about 60,000 rupees per person in financial year 24 compared to a loss of 1,28,000 rupees per person in financial year 23. The proportion of young traders, those under 30 years old, trading in F&O has increased significantly from 31% in financial year 23 to 43% in financial year 24. Nearly 93% of these young traders incurred losses in F&O in financial year 24, higher than the average loss maker of 91.1% in financial year 24. Over 75% of individual F&O traders in financial year 24 declared annual incomes of less than 5 lakh rupees. Almost half of all the F&O traders in financial year 24, that is 42 lakh traders, were new traders, that is, traders who traded for the first time in 3 years in the equity F&O segment. 92% of those new traders experienced losses and, on average, experienced a net loss of about 46,000 rupees per person in financial year 24. From financial year 2022 to 2024, individuals incurred more than 50,000 crore rupees in transaction costs for trading in F&O. On average, individual traders spent 26,000 rupees per person on F&O transaction costs in financial year 2024. Nearly 71% of transaction costs were in the form of brokerage, 51% of transaction costs, and exchange fees, that was 20%, the rest were taxes. So this is the story. There's a continuous huge increase in the number of people who trade F&O. A large number have low income. Individuals lose money while the big operators make money. Remember, derivatives are a zero-sum game. All profit comes from someone else's loss. On top of that, there are massive brokerage and exchange fees. The net conclusion is inescapable. You've heard many, including me in the past, say that this is gambling. Actually, this data shows that it is not. It's robbery. Exchanges, brokers, and the big algo traders are taking money from small investors' pockets. The question is, what is the regulator going to do about it?